What did we learn this week about the shift from QE to wherever we're going?
I think we learned a lot also about unintended consequences of regulation, because we've been seeing fragilities in markets that no one had expected. We've been seeing flash crashes in treasury markets and other markets. This is another example where there were some technical factors on treasury refinancing and tax payments that came in to interact with sort of lack of liquidity in markets that have been an unintended consequence of all the regulations that have tried to make the banks more stable. And we had these spikes in rates. And that's one of the issues that we have. It's not just quantitative easing, quantitative tightening. It's a whole panoply of things that have been the responses to the crisis. And we haven't really had a chance to step back and say, well, what are the interactions of all of those? Each individual piece may have made sense, but when you put them together, there can be unintended consequences. Here's a great chart. This is from Ira Jersey and our team. Professor, you can steal this for Boost School 101. The Fed balance sheet. All this balance sheet, by the way, is Kroszner's fault. We started down here at $1 trillion. Up we go in crisis. Up we go, way out front of Europe, way out front of Japan, and we come to a choice set. This is quantitative tightening. That ain't going to happen after what we saw this week. One idea is to flatline the balance sheet, and what we heard from Jeff Rosenberg and others is to grow it out in a measured way. Randy Kroszner, do we grow it out with a day-by-day repurchase process by the New York Fed, or do we grow it out with a permanent program of small amounts of billions each and every day? Well, I think I think it's certainly going to grow, and that had been happening with the balance sheet long before the crisis. Basically, as people demanded to hold more currency, that's how the Fed's balance sheet grew. They kind of passively just supplied the currency to the system. Now, obviously, there are other issues that are out there, and so I think the balance sheet is going to grow. And I think that they may do it in two ways. One is they'll have a standing facility to provide liquidity to the system if you get these kind of spikes or pressures that come up. And then second, you'll have a gradual increase over time to make it less likely that you have to use a standing facility like that. But many other central banks have used standing facilities. That wouldn't be completely outside of the realm of central banking. It would just be something different than the way the Fed is typically operated.
But Randy, overall, and thank you again for coming on today. Is there anything that makes you uneasy about what happened in the markets this week? That we should be, a lot of people say, look, for example, what happened with the repo was technical, but what if it wasn't?
Well, and I think that's why it's so important to us to sort of step back and assess. Now, it's been a bit more than a decade since the crisis and almost a decade since a lot of the regulations have been implemented, to try to see what are the interactions of them, what are the unintended consequences, and then see what are the institutions we need to respond to that. A very interesting issue has come up now about the LIBOR replacement, because that spiked also, and LIBOR didn't spike. Because LIBOR in some sense is smooth because it's not a real market rate. That's the downside of it, but the upside of it is it's less likely to spike.